It's Sensex expiry day, 11th of June. Listen to me very carefully, this pre-market analysis. I'll discuss all the points, but quickly I'll tell you things are not looking good. We are going to get almost 150, 160 point gap down. Now we have seen in the previous days also, there were huge negativity, 150, 160 points gap down you are getting, but then there is a recovery, right? Anytime market moves 150, 200 point upside, you are getting a sell-off on the downside. Whenever market going 150, 160, 200 points on the downside, you are getting a recovery also almost equal. Whenever you are getting a gap down, you are getting a recovery. And when you are getting a gap up, also you are getting a sell off. So this has been the trend. So gap up is sold into, gap down is bought into, any up move is again sold into 150, 200 points. Yesterday also, market moved to 200 points. It just got sold into. Day before yesterday, market I think initially came down 200 points and then recovered 200 points on Nifty expiry. And previous day, market went up and then came down, right? So this is the trend now. So we need to be very careful. You cannot, align with a particular view, because the view, if I need to take, I need to take a very strong negative view. I'll tell you the reason. And if it is negative view, opening itself, we should be going for a short. But since you are getting 150, 160 or two, that kind of gap down, the tradition for quite some time is they are getting aggressive buy and recovery. So we cannot be part of that, especially on Nifty or Sensex expiry. If I'm a buyer, it is going to be very difficult. If I'm a seller, I can start with put option selling, right? Expecting that the market may show some kind of recovery. So the premium will get adjusted and they will spike the call premium. And once they come close to filling the gap or like 20 MA, there I can sell a call. And if that is breaking, I can, make it as a straddle. And then I can go and I can start adjusting. But a buyer, it is very crucial and you have to enter only at your levels. Never chase this rally. It is going to be very difficult. If you want to chase the rally and if you're looking further down, you see, when I'm saying, we are going to get 150 point gap down, it is around 23,000 level, and 23,000 is a major support level. Last few days, what we have seen is they're trying to break the 23, 200 and 100 levels, right? But now it is coming to 23,000. So for quite some time, we haven't seen that. So this is going to be a very important support level. So negative, market is negative, US market is crashed, oil price spiked 3%, the tension escalation is going on, and US markets is down by 2%, and all VIX have increased, and all those fear is there. But at the same time, all these are actually, you're getting it as a gap down and you are not getting an opportunity to enter. The move is over with the gap down itself. Then comes the shock covering, then comes the recovery. So if you see that gap down, or if you analyze the pre-market and you make a view that it is sell on rise or it is selling side, upon gap down, can you enter? No, you will be getting trapped. Now, where it should give a bounce, at least it should give a bounce to 20 MA. Right, this is how you have to trade as a buyer. As a seller, we have you can come out in any way. You, even if you start with start selling a put at that 23,000 level, and then if it comes to 20 MA, you will sell a call. So you'll have a put and a call. And if 20 MA breaks on the upside, what you will do, you will sell one extra put. If it is getting rejected at 20 MA, you'll get profit. And if it is in that range for quite some time, you'll get profit in both. And then you keep adjusting. If it is going further higher to fill the gap, extra call you will be selling there, right? So you will just adjust keep on adjusting the ratio. So that's easy. But a buyer need to be spot on, make the exact entry, and that's exactly what we teach in our live market sessions also. So if you are interested, you can join our live market program where I trade live and I teach you. Now let's discuss a scenario. So why I told this much is because I've seen people have this view. Yes, follow the view that I'm saying. It is mostly correct. 90% of the time it is correct, but view is not the entry. Yeah, view is negative, but upon opening itself, if you enter, you get trapped. I hope this point I'm repeating multiple times now today. Why I'm doing it is because I'm stressing on this, because just don't jump into this by looking at the gap down. Now think about the different scenario. Everything is negative. GIFT Nifty is indicating 150 point gap down, but luckily you got a flat opening. Then there's a golden opportunity. You'll have to look on the downside. Market is going to show you at least 150, 200 point down for today. So if you get a flat opening, then you're getting it. Then this is a scenario where you need to enter. But you are expecting a 150, 160 point gap down, looking negative, and you're getting that, means the move is over. It's not that move is over. It can go further down also. But if you're entering means, what if there is a small recovery? Then you get trapped. Unnecessary drawdown, unnecessary stop losses you'll have to take. Now, instead of 150 point gap down, you're hardly getting 30, 40 point gap down also. Still, you can enter because we are looking for something like 150, 160 point move on the downside for sure. Now, flat opening you can enter, small gap down you can enter. What if you get a gap up? You'll never get it, but if you get it, that's the golden opportunity again. That is unlikely. That is not possible. But what if this big gap down as we expected? We know this is what we are expecting, but still we know the view is negative. We know the markets are going negative. Can we enter? We have no other option. As an option buyer, you have to understand your limitation. You cannot enter. Even if market is not bouncing from there, market is staying there. Expiry day, you enter, you just get stuck. As a seller, I can enter. And whatever move they make, whether it is on the upside, so I enter as a put option seller. And then if immediately breaking, I'll sell another call, I'll make it as a strategy. If I enter as a put option seller, if it give a bounce to 20 MA, I sell a call also. So I have a put and a call. Now if it breaks from there, I'll sell another put. And comes to gap fill, I'll sell another call. And if it reverse, that call and this put will give me profit as long as it's in this range. Then only thing is that I need to see lowers breaking. So that is how I can do. I can do anything. I can do one thing today, the other tomorrow. I can, do one thing, other thing, other thing, other thing. I can keep doing multiple things as a seller, and still I can come out in profit. I can come in four legs like a cat. Okay, so let's look at the scenarios. What happened on weekend? US markets have crashed 4%, right? And that is because Iran was attacking Israel. That news has came, and then oil price of also spiked. We got a big gap down, and it just got adjusted. It got bought into. The negativity was so high on that day. Then comes on Monday, ceasefire between Israel and Iran, and we were looking for a gap up, and we got a gap up. We were looking for gap fill also of the previous day because that scenario has now changed completely, and then Trump administration is also saying some peace deal preliminary stage acceptance is also there. So things are positive. So at least we should be filling the gap. But Nifty expiry day, they managed it very well. Bank Nifty was skyrocketing. Nifty, they just managed it sideways, straddle play, because IT has dragged. And yesterday, that gap they filled, but then again reversed. So this has been the trend. 150, 200 point up move, you get intraday sell off, right? If you get 150, 200 point down move intraday buying. You get a 150 gap down, you get a recovery. You get an intraday gap up, you get a sell off. This has been the trend. Now, if you look at the things, Monday, this ceasefire things have happened. And Israel also attacked Lebanon, Israel also attacked Iran, and then came the ceasefire. And then we have seen that US administration have provisionally agreed to the proposal to this deal, but still, Tuesday came this news that Iran attacked a US helicopter and shot down. And then the Trump also was threatening. So on one side, yesterday, this I discussed in the pre-market. On one side, there is a possibility that the Trump administration gave a preliminary acceptance and a no to the agreement. But at the same time, President is warning that he will retaliate for that attack on the helicopters. So that kind of issues is going on. So it was mixed yesterday. And now if you see oil market, WTI, yesterday we saw at 88, but now it's back to 91, 3% up. Brent crude 94, 95, right? So the things are changing. US inflation data also, you see headline consumer inflation. Headline means it includes food and fuel. That comes at a higher level of 4.2, and this is the highest in the last 3 years, but actually expected 4.2 was the expectation. But there is a positive, slight positive if you look at the month-on-month basis. The core inflation. Core inflation means we exclude food and fuel. Food is very volatile. Fuel is very volatile. So that can keep changing. So if you need to know the actual inflation, it should be excluding food and fuel. So that increased only by 2%, which is actually below the expectations and lower than April also. But excluding food and fuel. Okay, so that is a core inflation. So again, if tension between US and Iran, if it comes down, then oil price can decline, and that can potentially, bring down overall inflation further lower also. So there is some positive when it comes to this, because the other side is looking very clean. Food and fuel is the one which actually spiked. Okay, now US markets, if you see yesterday, Dow is almost 2% down, S&P 2% down, Nasdaq 2% down, VIX have moved up 12% and now it is 22. Gift Nifty, it's showing 23,040, 50 level, 23,050. Assume Gift Nifty is a index which is, it is a future means it is traded with premium compared to the spot. It is a derivative of Nifty. So even if you now this is 11th, we have 20 more days right in this month. So for 20 days, even if you give 60 premium, now where is it going to open? It should be 23,060, which is the current Gift Nifty level, minus 60 premium. It is going to be 23,000. So the market is going to open her. It can be 200 point down also. Now 23,000 is where Nifty is going to open. Will you be selling immediately at 23,000? It's a psychological support. Aggressive put writing will come. It's already there. That level will be defended. They try to defend definitely right at the opening. So think about that and take logical decisions. Okay. So it's not that you see, I talk logic and I speak what exactly is supposed to be done. I don't talk any unnecessary theoretical things. Whatever I told you, starting with selling puts and then selling a call. It's not a traditional way of option selling. It's a modern way of option selling, and that is how you'll make money. Immediately at the opening, you sell a straddle. You're not going to make money these days. So you need to be, anyway, you're watching the market and you're doing it, and that's how you'll be making money. Okay. If you look at IT stocks, ADR closed negative, but in India also, it was actually trading negative. ICICI and ADR, if you see, similar percentage change as that of India. HDFC marginally negative, but ADR is not indicating not much negativity. It could be a arbitrage correction only. And I told you there is a Bombay High Court judgment also in HDFC favor, came in that defamation case. That is why HDFC have turned positive last day. Because of that, HDFC ADR is also increased by 2%. Okay, overall ADRs is looking a kind of flat, not that much negative, even though US market is 2% down, it's not that negative. Now, apart from that, related to this oil prices, you see, there were expectations that the government may reduce the excess duty on petrol and fuel. So we will see how it is going to benefit the market later. Not much a big impact on today's markets. Let's focus on today's market. Coming to institutional activity, FIIs sold for 2,000 crores. DI, they're selling again. DI is bought for 3,000 crores. So if you see net inflow, it's actually 1,000 crore, but market have crashed almost 200 point, and the low is also broken. That's very important. Yesterday's low is broken. So US markets closed significantly negative. Let me talk about the main points now. US markets have closed significantly negative. That's a very negative poke for India. And Trump is further intensifying his threat against Iran. That's again indicating the war is going to escalate, or there is no potential peace agreement coming soon. And oil price increased sharply, very negative. Global market sentiment turned weak, very negative. Gift Nifty is indicating a big gap down, close to 23,000. Big negative, very negative. And Indian ADRs are remaining relatively stable. That's okay. And you see, there is no major India-specific macro developments which is coming, except that fuel duty decision. And today it's Sensex expiry day, so expiry related volatility also will be there. So how it will be managed, right? When you get such a big gap down, aggressive put selling will, because the put premiums will inflate. So now put selling will come. So you will bring that put premium normal by slightly increasing the calls. Now you get calls at a better level to sell further, and then you will sell. And if you can keep in a range of that low where it is opening, just like last day, what they did, Nifty expiry, where they opened, there they closed. Down move, and there is a slow up move. They did not break the high, so they just kept it in that range. If that is a case, the gap down, there is a bounce to some level, maybe 150, 200 point, fill the gap, and just like Nifty expiry, gap up, they fill the gap and move, close that gap up itself. Similarly, if that happens today, it is going to be seller's day, but still you will get opportunities. There are opportunities where you can get like 20 MA trades, like gap filling trades. With patience, you'll have to take it rather than chasing the trades unnecessarily. So this is what I want to tell you. But apart from that, there are many other important points also to discuss. We don't have time, right? So we'll close this. Technical, I have already discussed in yesterday's post-market analysis. So Nifty, important resistance now is going to be 23,200. Support is where it is opening. If that breaks 22,800, it can go. Bank Nifty support 54,700. Bank Nifty is actually strong. Let's see how it is opening today. Resistance is 55,500. Maximum call OI, it will shift now. It is at 23,500 and 23,400, 23,300 level. Now it will shift to 23,200 also, because today, if it is opening at 23,000, they'll expect a close below 23,200. So 23,200 calls will be aggressively sold. Even I don't mind. I don't get surprised even if 23,100 is also getting sold, right? And then put side, if you see, it was at 23,200. Those guys will shift to 23,000 right at the open, and more puts will be sold at 23,000, 22,800, that levels also. So this is, if I look at the option and open interest, key resistance is at 23,500 and 22,500. That's the big range. But what they do is they'll keep shifting based on this day. So 23,200 more will come on the call side, 23,000 more will come on the put side. They'll try to keep it in that tight range. If that break on the high side or low side, that's when you'll get that gamma blast, and that's when you'll get the bigger move. So trade sensibly, trade by understanding the things rather than looking at the noises. I hope this is very clear. And if you would like to join us for the live market community or the trading sessions, you can get in touch with us. I see you.